Hello, everybody. Once again, we have Viljoen joining us for his masterclass on sales today. I do hope you enjoy it. Leon, welcome and take it away.
Thanks, Mark, and good afternoon to those that joined. We will do the second webinar called Sales, where sales will be the main topic, but what you will hear today is a bit of repeat from the culture and strategy session. I think it's good to revisit one or two aspects, but really when we speak about sales, sales is such an important part in the company and also with forming of the strategy that a lot of analysis and that is done in the sales side. And I will go into a bit more depth on the analysis and that during this session. So let's just get this underway. Okay, the takeaway points I would like you to take away after this session is proper market analysis combined with a focused sales force is key to growth and sustainability. I think that's important, the proper market analysis and a focused sales force. Sales personnel's KPIs must include weekly, monthly, depending on the size of the company, and what they are selling, systems or products, base orders, intake per customer, existing customers, weekly, monthly base order intake from new customers. Very important that we distinguish between existing customers and new customers, and that we have a KPI per customer and not just a global figure. Average profit margin from weekly, monthly base order intake. And here, a lot of people will immediately say, what does sales got to do with profit? Very, very important part of the equation when it comes to salespeople is they need to be measured on profit. Monthly, quarterly, large order intake, and then conversion rate from lead to order. And you'll see there, I'm speaking about from a lead to order and not from an inquiry to an order. That's also important, but we'll get into detail on these issues. And then training of sales personnel is extremely important. And for me, this is an aspect that is badly done in a lot of companies, where everybody gets trained except the salespeople. And I believe salespeople need to be trained more than a lot of other people. Let's just take a quick recap of the first webinar where we spoke about culture and strategy and the 3 takeaway points of that webinar. Excellent customer service can be a differentiator in any industry in South Africa. And this is not a strategy, but really a culture that needs to be lived and driven from the top. Very important. Having the correct strategy that everyone in the company understands and are awarded on is the foundation of any successful company. And then ongoing and clear communication is key to the success of changing a culture as well as implementing a strategy. So these are the 3 points from the first webinar. And now let's get into today's webinar on sales. So customer service culture and sales, because we said we want a customer service culture, and I think it's important to have a customer service culture, and it starts in sales, because salespeople is the face of the company towards customers. A lot of companies, customers will only interact or first interact with salespeople, and in a lot of companies only act with salespeople. So if your salespeople haven't got that customer service culture, then you're doomed. Salespeople must have a customer service culture. And last time I spoke about BNR, and I would like to repeat that during this webinar. BNR is an industrial automation company in Austria that was acquired by ABB some years ago. Their sales staff, when they join the company, are put into training for 9 months before they are allowed to interact with a customer. Now, when we speak about sales and paying a salesperson for 9 months before they're allowed to interact with customers, a lot of people will say it's a waste of time, waste of money. Doesn't matter how experienced the salesperson salesperson is. It is extremely important. And they've been successful for many years until they were acquired by ABB, and is still very successful today because of this. And they haven't changed it because they want to ensure that the salesperson have got good product and system knowledge and can really give the customer service that they determine the level thereof, that it needs to be a very high level of customer service. So that's why they train the person for 9 months. So is it penny wise, pound foolish not to do it? That's a question I'd like to pose to you. Now, when we speak about senior and middle management with sales and the senior middle management in the company, I'm astounded at how few people, salespeople, middle managers, senior managers want to speak to unhappy customers. Unhappy customer, by definition, is still a customer of the company. And we all know that the cost of acquiring a new customer is 5 times that of retaining an existing current customer. So why don't we want to speak to customers? In my experience, when you speak to an unhappy customer and you resolve the issue and you play open cards and you're honest and good communication, that customer at the end of the whole saga is a much more loyal customer going forward in 99% of cases. There you've retained the customer, you've made him more loyal, and it's cost you less than acquiring a new customer. So for me, it's frightening to see that people run away from unhappy customers rather than speaking to them and resolving the issue. And that is something that's extremely important for any manager to remember. Customer focus does not mean saying yes to everything. When you speak to a lot of people, and specifically salespeople, about you need to be more customer focused, they say, I can't say yes to everything the customer wants. Now, customer focus doesn't mean you need to say yes to everything the customer wants. You need to understand the customers, and you need to understand their KPIs. What are they being measured at, and how can you assist them in making their KPIs? And that is a happy customer. You must assist them, the salespeople need to assist them so the customer can achieve their goals, their KPIs. Breaking down the strategy. Now, the company has got an overall strategy, but it means nothing if that strategy isn't rolled down into all the divisions, into all the departments. And the first department that it needs to be rolled down into is your sales department. So you've got the company strategy, and that needs to become a sales strategy, because the two need to be aligned to each other for the company strategy to be successful. So that needs to break down the sales strategy then further down into action plans with KPIs, associated KPIs to the sales action plan. Only then can a company be successful. And for me, it's frightening when you speak to companies, how few companies go through these basic steps to ensure that everything is aligned to each other, to make sure that everybody is working towards the same strategic goals in the end of the day. Market segmentation, something that we spoke about in the first webinar. Segmenting the market and analyzing it in terms of growth per market segment. That means you're looking for market segments that is growing because you want your business to grow. A company that doesn't grow is a company that's not sustainable. Even in bad times, you need to look for market segments where your products and services can be successful, and you need to grow your business. If you're not the number 1 or 2 player in that market, then even in a declining market, you can grow your market share. Because the big players in the market can lose market share against you if you do things in a better way and you're more successful in that market. It's very important to understand the customer spend in terms of CapEx and OpEx. Very important. If the salespeople have not got the ability to get this information and to understand what each of your customers are spending on CapEx and OpEx, then there is a problem. Your detailed customer analysis, you need to know your share of wallet with the customer. So if you know what they're spending, have spent, what you have got as order intake from them during the previous year, 2, 3 years, then you can work out your share of wallet with that customer. And that gives a company a good idea where you stand relative to your opposition, to your competitor, with each customer. A very important aspect that you didn't touch on previously is that the customer analysis must be done as far as volume and profit margins are concerned. Each customer, you must know what the volume is, what volume business you're getting from them, and the profit margins that you're actually making with that specific customer on the products, on the systems, on the service side. And the accuracy of doing this analysis will also give you a very good idea of how close your company and the sales personnel is to your customers. And sometimes it's frightening when one of our top 5 customers, we cannot do this analysis properly. That means they are one of your best customers, but it is more by chance than by design. And that is something that can change overnight because you haven't got a feel of what's actually happening at the customer side of the business. Now, how do we increase the share of wallet? By offering additional products and or services to our existing customers. We said an existing customer costs you a fifth in cost of creating a new customer. So it's much better keeping existing customers because you've got good relations, you understand the customer, they understand you. And to increase the share of wallet, to grow your business, you increase the share of wallet by adding products, services to your bucket that you're offering them. And it doesn't mean you need to manufacture, it means you need to get into partnerships. And the only way you can do that is by understanding the customer's KPIs and the way they measure the supplier. What is important for them with suppliers? What do they rate the highest? And then partnerships can assist you when you know these things to help you grow your share of wallet. So it doesn't mean you need to be everything to everybody. It means you need to form partnerships with suppliers and other companies where you have got the link to the customer. And one of the extremely important things is in the partnerships, it need to be win-win partnerships. Because if it's not win-win partnerships, that partnerships won't last. Now, customer engagement. Everybody speaks about customer engagement, but it's extremely important that we spend enough time on the correct customer that brings the most value to the company. So if a salesperson have got a spare hour, they need to understand who to spend time with that brings the most value to the company. Not the customer that the salesperson likes to speak to, but the one that actually brings the value to the company. Now, how do we define value? Value in this case is defined as profit and volume. You've done the analysis on the customers, you understand the volume and the profit that they bring, and doing that, you understand which is your most important customer. A customer might bring you a huge amount of volume with little profit, but that huge amount of volume will cover a lot of your overhead costs. So although the profit margin is much less than some other companies, they are extremely important because that's your base that you're building your business on. It's also important for a salesperson to understand how the company is performing in the eyes of the customer. That means, what is your on-time delivery to his customer, he or she's customer? And if it is not what it should be, then they need to raise the red flag within the company. They are the ears and the voice of the customer within the company. And a lot of salespeople don't want to do it because it makes them unpopular with colleagues. But that is something they need to do. They need to ensure that they are the ears and the voice of the customer within your company, and raise the red flag when they see your delivery, on-time delivery, or the pricing or the loss of orders. Things are going wrong between the customer and your company. Duties of sales personnel: retaining and growing customers. That is why we said in the beginning, a KPI is retaining existing customers and growing those customers, your order intake from those customers. Obtaining customer commitment at each phase of a project. Now, when we're speaking about CapEx spend, there's certain phases that the CapEx spend goes through before inquiries come on. And you need to understand and get commitment from the customer on when what is going to happen. So you can ensure that there's alignment between your company and the customer as far as when things are going to happen. Accuracy of order intake forecast and conversion rate from leads to order. This is extremely important. The accuracy of the order intake forecast. If the accuracy is not there, that means the salesperson is not close to the customer. They don't understand when things happen and how things happen within the customer. And it's important for a salesperson to know when orders will be placed and not hoping when orders will be placed. Also, the conversion rate from a lead to an order. Here you'll see we're speaking about leads and not inquiries. The salesperson needs to know about what is coming from a customer before the inquiry. And we'll speak soon about the reason for this. Base orders. This is your bread and butter business. I call it bread and butter business. This is what makes your company sustainable. You survive with bread and butter business. This is normally based on OPEX spent from a customer. That means it happens daily, weekly, monthly, yearly, but it happens continuously. This must cover your costs. You cannot survive with large orders and hope that you will have large orders on a continuous basis. Your company needs to be made up of base orders and large orders, but the base orders need to cover your costs. And the base orders must grow on a year-to-year basis. And you need to separate base orders with large orders. Now, people will ask me, what is a large order and what is a base order? That depends from company to company. In a large company, the company I work for, ABB, your large order is defined as 15 million US dollar. Now, if your turnover in South Africa is 20 million a year, then surely your large order might be 1 million rand. That is for every company to determine what is base orders and large orders. Your base orders is your continuous business and normally comes from OPEX. Your large orders come from CapEx and is mostly a one-off, and you get it every couple of years from a customer and not on a continuous basis. Growth must be a sales KPI. It's extremely important that the company grows, otherwise it stagnates and it dies. And that growth needs to come from two sources, from existing customers and new customers. So there needs to be two KPIs here and not one. You need business from existing customers, but you also need business from new customers for a company to be and maintain sustainability. Let's speak about the large order side. This must be measured separately from base orders, like I've stated before. And it normally comes from capital outlays from a customer, CapEx based. That means a customer's got a big project. Now they're going to order equipment or systems or services for that large project. That happens once every couple of years, and that is something that's extremely important for you to target and to have must-win tenders. Now we'll get to must-win tenders on the next slide. It's infrequent from one customer. So that means you need to have large orders in different years from different customers. And there needs to be a formal process on how you deal in obtaining large orders. Now, that formal process is what I call must-win tenders. So you're saying a project is coming up, there's a large order, possibility of a large order. What do we do to ensure that we win the large order? Must-win tenders. Usually large orders. You require somebody senior in the company that's got enough say in the company to sponsor that tender from when it's a lead. Not to bring the person in when the tender is being done, but actually from the lead stage to also give guidance to salespeople on how the company can be successful and to influence other managers and other departments to work together on this tender. Training of sales as well as your technical, legal, financial personnel is essential on must-win tenders. So how do we form a team? How do we work together? How do we ensure that all people are on board to make sure that we win this tender? If the salesperson is trying to win a tender, but the technical or the legal people or the finance people is not on board, the tender will be lost and the company will lose, just because they don't understand how critical it is for the company to win these tenders. And for that, the KPI, part of the KPI of the whole team must be to win this tender. So if you're a person, the legal person that's involved in the tender, and you must go through the conditions and make sure that the company is covered, but not just put all the deviations in because that will cover you, but you put deviations in that's really applicable. That KPI must be on that legal person as well. And here you find a lot of resistance from the other departments because they don't want to be linked to it. But it's extremely important that the legal person on the team, the finance person, the technical person, the salesperson, they're all measured on the success of the must-win tender. Customer inquiries. Now, this could be very controversial, but responding to inquiries is futile. And what do I mean? If the first time your company knows about the inquiry is when the inquiry comes out, then it is futile to participate in the inquiry. The chances of success is extremely low, irrespective of your market share and your market dominance. You must, and your salespeople must be aware of the customer needs and guide the customer to the correct solution. And of course, that correct solution is a solution that your company can supply. And if you are only aware of the inquiry when it comes out, another company has done exactly this. That is why I'm saying it's futile to then tender, because the chance of you winning it when somebody else has influenced the specification and ensured that their company is in a better position than yours to win the tender, you are barking up the wrong tree here. That is why the strength of the pipeline is very important. What I mean by a pipeline, that means you've got the leads that turns into inquiries, that turn into orders. And that is your pipeline. That means your inquiry, the amount of inquiries. If you say my ratio from turning a lead into an order over the last 2 years is on average 10%. So 10% of leads turn into orders for the company. Then if you want a 100 million turnover, you better have R1 billion in leads, because otherwise you will not get to 100 million in turnover. And those ratios is extremely important to know and understand, because then you know when your company is growing, and you know long in advance when your company will be shrinking. And you can do something about it if your leads is not 1 billion, then you must ensure that your hit rate from lead to order is better than 10%. And you need to put things in place to make sure that it goes to 15 or 20%, depending on how much you've got under leads. So it's a very early indication for you on where the company is going, and it gives you enough time to change things to ensure that your company is sustainable. So here we speak about conversion rate from lead to order is the key to success. And this is something very few companies look at, and I think it is critical for them to look at this for sustainability, because you can see trouble coming long before other companies are seeing it if you focus on these ratios. And you can see what's happening with your leads, and if your leads decrease, that means your order intake will decrease in months to come, and that means your revenue will decrease in a year's time, or 2 years' time, or 6 months' time, depending on what product and service you offer. So let's speak a bit about internal control when it comes to salespeople, because internal control, a lot of people tell me, is only for manufacturing, got nothing to do with sales. Now, for me, internal controls is as important in sales as it is in manufacturing. Because if you've got no short interval controls, then all you have is chaos at the end of the month when the order intake is not where you want it to be or where it needs to be for you to make your year-end target. That means if you are selling product, you need to have controls that says, I want to sell 1 million per month. That means there's 4 weeks in this month. That means each week we need to sell 250,000. If we don't sell 250,000 in the first week, a red flag must go up, because you need to understand why aren't we selling it, and what do we need to do to make it 1 million. Do customers normally procure in the second week of a month? Then you're still fine. But if they procure mostly in the first week of a month, and you're not on 250, then you know the end of the month you're going to have a shortfall if you do not react. That gives you 3 weeks to react. It's no use in the last week of the month seeing that, oh, we're not going to make our target, mad rush on huge pressure on salespeople to bring in orders, and the chances of you making it is slim. So rather put in the controls and the measures early in the month to highlight and red flag, then you've got time to react. Sales personnel and profit. Like I said, I believe they need to be measured on profit. A lot of people say, specifically salespeople, will argue this point. They must also know the break-even order intake at average allowable margin for the company. Because if they don't understand, if you bring orders in at the minimum or average profit margins, then the company won't break even. So if they want to discount tenders to win the order, then they need to understand the impact thereof on the company, and that order intake needs to increase at a lower profit margin. And this is something that very few salespeople want to look at, but if you don't force that in, then there is problems ahead. So profit must be one of the KPIs for salespeople. And if you have a look at that, you will also see where people are giving away profits just to get orders in. We're in a joint venture at the moment, and I'm having a discussion with the company's sales manager for exactly this. He wants to discount everything just to ensure that he gets an order. Why? Because he is only measured on order intake. So when you ask him, why are you giving profits away? Because we believe we can win this contract with the profit margin that we've got. He says he wants to ensure that the order comes in because he's only measured on order intake. As soon as you put the profit in as a measurement, he will think differently about the whole scenario. And he will understand at what margins he can win orders and cannot win orders. Training. One of the big bugbears for me when it comes to salespeople. We spoke about B&R. They train their people for 9 months. But I believe salespeople is the least trained people in most companies. We expect salespeople just to sell. They need to know how to sell. Doesn't matter if we haven't trained them, we expect them to sell. Training in sales techniques is extremely important. I spoke in the first webinar about it, and I'll say it again. Sales techniques like listening to a customer and then coming up with a solution for the customer is a better sales technique than walking in and trying to sell the customer something they don't want. How many times have you gone to a shop trying to buy some equipment, and what you want and your need, the salesperson doesn't even listen to, because he's got something that he wants to sell you. And after a minute or two's conversation, you decide to rather go somewhere else where they are listening to you and actually coming up with a solution or product that meets your needs, and not a product that meets the needs of somebody else and is 10 times more expensive because it's got 10 times more functions that you don't need. So sales techniques is extremely important, and salespeople need to be trained in the sales techniques. This again, in my experience, there are only 1 in 20 that do not try and sell, but rather listen and advise accordingly. And do yourself a favor. When salespeople come and see you, and when you go into shops, have a look at this, at how many salespeople want to speak rather than to listen to what you actually need. Then what's also important is training on processes to ensure that the processes that they follow is done correctly, because in the execution of orders, if the salespeople do not follow the correct processes and procedures, there's chaos on that side. And then the products get incorrectly delivered or delivered late, and it is not the fault of the execution side, but it's actually the fault of the sales side. So it's very important that we start the process correctly, and the people that start the process in any company is your salespeople. They also need to have product and system knowledge so they can assist the customer to obtain his or her goals, not to sell a system or to sell a product, but actually to assist a customer. So here we're back on my favorite subject, communication. Communication is key to the success of any initiative. Sales personnel is the customer's voice within the company. Without open and frank communication between the functions, sales is dead. Now let's get back to the second point, where your salesperson is the customer's voice within your company. That means they're going to be unpopular with certain departments because they will be vocal about what the customer's expectation is, and if that expectation is not met. Now, a lot of managers I've seen will turn around to the customer, to the salesperson, and tell the salesperson, on whose side are you, the customers or on our company? Who pays your salary? Why are you on the customer side? That salesperson is not on the customer side. That salesperson is on the same side as the manager asking the question. They're trying to ensure that the customer is satisfied. So that means the customer will come back. Because if the customers don't come back, both the salesperson and the manager won't have a, my apology. The customer will not come back, and the salesperson as well as the manager will not have a job. That is something we need to understand. Salespeople need to understand it, but more importantly, the rest of the company needs to understand it. That when a salesperson speaks and they're the voice of the customer, that must be respected and it must be listened to. And also, when I speak about open and frank communication between functions, that means the execution side need to inform the salesperson when things go wrong, so that the salesperson can inform the customer as quick as possible that there is issues. The quicker you inform the customer about the issues, the happier the customer will be at the end of the day, because in a lot of cases, they can do things to mitigate the impact of a late delivery. But if they don't know about the late delivery until it's late, there's very little they can do. So that open and frank communication between functions towards sales is extremely important. And it's extremely important for managers to ensure that this happens. So in summary, proper market analysis combined with a focused sales force is key to growth and sustainability. Again, if there's no growth, there's no sustainability, irrespective of the climate out there. Sales personnel's KPIs must include weekly, monthly base order intake per customer, existing customers, then new customers, because we need to grow our business. That means we need more orders from our existing customers, but we also need new customers to make sure we're not reliant on one or two customers, and when they don't give us orders, the company is in trouble. Average profit margin from weekly, monthly base order intake. Here the profit side comes in, that the salesperson is responsible for the profit margin, because they are the people that in a lot of times can determine if we can push the profit margin by another 0.5%. That 0.5% at the end of the day can mean survival or death of a company. Monthly, quarterly, large order intake. So here we say we split base orders and large orders to ensure that we look after our bread and butter business and that grows, and we target certain large orders to make sure that's the cream on top of what we're doing. And the conversion rate from lead to order, because if that conversion rate is not there, that means the salesperson, it does not understand the customer, and that salesperson is maybe only going to customers that they enjoy speaking to, where there's no issues, and we're losing business because from lead to order, that conversion rate is not there. And then lastly, training of sales personnel is extremely important. Let's not expect a person with the title sales to know what he or she is doing. Let's ensure we give them the training and the ammunition and the equipment to do their job properly, and then we can expect them to bring orders in. There's too many companies that's just expecting people to walk in and to know what they should be doing. I trust that today I've given you a bit more insight into sales, how I believe sales need to be run in a company. And if you can answer yes to all the suggestions, then you've got a fantastic sales side. If there's no, then ask yourself, why is it no? And what can we do to enhance the sales of our company? I thank you. The next webinar, we'll speak about networking and partnerships, because like I've said, You can't be everything to everybody today, specifically while technology is changing so fast. So it's important to form those networks, to form partnerships with other companies, and for these things to be successful. Because if you don't do it the right way, then it won't be successful, and you can do more damage than good by having partnerships going forward. I thank you and wish you a very pleasant day.